It only takes a single event, one moment, to send massive shockwaves through the entire global economy. It can create unbelievable risk, but also, for some, unprecedented opportunity. Today, we're going to break down how a conflict in the Gulf could totally reshape the markets, and more importantly, what it could mean for you.
So just imagine this. The date is February 28, 2026. News breaks that joint U.S. and Israeli strikes have hit Iran. And it gets worse. Reports say its supreme leader was killed. Iran's retaliation is immediate. They target U.S. bases and its allies all across the region. And just like that, the world is staring down a brand new and incredibly dangerous reality.
The market's reaction? It's swift, and it is absolutely brutal. The S&P 500 just plunges, shedding over 4% as investors scramble to get away from risk. But at the same time, look at this. Brent crude oil skyrockets 30%, all on fears of a massive supply disruption. That split screen right there tells the whole story. Total panic in the broad market and an absolute feeding frenzy for oil.
Okay, but this isn't just any conflict. The real reason for this insane reaction comes down to one of the most important pieces of water on the entire planet. Let's talk about why the Strait of Hormuz changes absolutely everything. 20%. Just let that number sink in. One-fifth of all the oil the world uses every single day has to pass through this one narrow strait. Not to mention a huge amount of liquefied natural gas. So when this tiny little route is threatened, you better believe the entire global energy system just holds its breath.
Yeah, Hormuz is what experts call a geopolitical choke point. It's a fancy term, but the idea is simple. Its geography makes it both completely essential and, at the same time, incredibly vulnerable. If you control that choke point, you've got your hand on a lever that can move the global economy. And in this scenario, that lever is being used as a weapon.
And listen, this isn't just some abstract threat. This is a direct quote from a senior official in Iran's Revolutionary Guard Corps, broadcasted to every ship in the area. It's not a formal legal blockade. It's way scarier. It's a de facto closure, backed up by a very real threat. And you can bet that ship owners and insurance companies are not about to call that bluff.
But you know how it goes. With any big crisis, while most people are seeing nothing but risk, there are always others looking for the opportunity. This massive disruption is actually creating a whole new set of winners in the market. So let's take a look at who's actually thriving in all this chaos.
And the contrast is just stark. While the S&P 500 is getting hammered, a few key sectors are absolutely surging. I'm talking about energy companies that aren't tied to the Gulf, they're booming. Defense contractors are getting a flood of new orders, and of course, cybersecurity and AI firms are seeing unbelievable demand to fight this modern-day war.
Let's get specific for a second. On the watch list, you've got companies like Chevron, right? They're insulated from that Hormuz choke point, so they are just capturing record profits. You've got Lockheed Martin, obviously benefiting as governments scramble to restock their weapons. Then there's Palantir, where demand for its AI battlefield tech is just off the charts. And then you've got a longer-term play like NextEra Energy, as this whole crisis forces nations to seriously rethink what true energy security actually looks like.
So the immediate trade seems pretty obvious, right? Buy energy, buy defense. But this is where it gets really interesting. History actually offers a very powerful and, well, a very different lesson for anyone thinking long-term.
And that leads us to the single most important question any investor could be asking right now. Does this rally, this surge in these crisis sectors, does it actually last? Or is it just a short-term gut reaction that's going to end up burning anyone who shows up to the party too late?
Well, history has a fascinating answer. Check this out. This timeline shows the 5 biggest oil shocks of the last 50 years. You've got the OPEC embargo in '73, the Iranian Revolution, the Gulf War, the 2008 peak, and the Ukraine invasion in 2022. Every single one of them caused a massive spike in oil prices. And in every single case, that spike eventually and often dramatically came crashing back down.
This quote just sums it up perfectly. Our knee-jerk reaction in these moments is to chase the hot thing, buy energy, and dump the growth sectors like tech. But looking back, that has been the absolute wrong long-term move, 5 out of 5 times. Once the initial panic fades and oil stabilizes, the market tends to revert back to normal, and the people who chase that spike, well, they're often the ones left holding the bag.
So, what do? You've got this chaotic, scary present on one hand, and these clear lessons from the past on the other. How do you possibly build a smart strategy? Well, it's not about trying to predict the future. It's about having a solid framework to guide you.
And that framework really rests on 4 key ideas. First, and this is huge, stay diversified. Don't go all in on one hot crisis sector. Second, focus on quality. We're talking about companies with strong balance sheets and low debt that can survive any storm. Third, it's probably not a bad idea to consider some classic hedges like gold. And finally, and this is the big one, try to see moments of panic not as a time to sell everything, but as a chance to strategically buy those quality companies at a serious discount.
And that really brings us to the final, critical question you have to ask yourself. All the headlines are screaming about risk. They're designed to drive fear and panic. But as history shows us time and time again, the biggest risk in moments like these often isn't the crisis itself. It's panicking. And in that panic, completely missing the long-term opportunities that are quietly being created right in front of you.